Welcome to Talk Tickers. Today we're diving into Dropbox's first quarter 2025 earnings call.
Yeah, quite a bit to unpack here.
So high level first. Revenue, it saw a slight dip year over year, landing at $625 million.
Right, and pretty similar on a constant currency basis too, just a minor decline.
Total ARR was also down a little year over year, though it held flat constant currency. FormSwift seemed to be a big factor there.
Definitely. And you saw that impact on paying users too, a sequential decrease. But interestingly, it wasn't as steep as they expected.
Why was that?
Mainly because they pulled back on investment in FormSwift, as you mentioned. Average revenue per paying user also dipped slightly quarter over quarter.
Okay, so some slight declines, but you said it wasn't as bad as expected.
Exactly. Despite those figures, Dropbox actually beat their own expectations for the quarter.
Huh. What drove that?
Seems like strength in their self-serve teams and individual offerings really carried the day.
Gotcha. And what about the bottom line? Margins? Profit?
Looked pretty healthy, actually. Non-GAAP operating margin hit a record high.
A record high. Wow.
Yeah.
Oh.
And they saw big year-over-year jumps in non-GAAP net income and diluted EPS. Unlevered free cash flow was strong, too.
And they were buying back stock.
Yeah. Substantial share repurchases during the quarter. Shows some confidence,
Okay, so let's dig deeper. Let's unpack what's driving this, starting with their big strategic push Dash. Sounds like a major update just landed.
Oh yeah, the spring update for Dash looks pretty significant. They're really pushing its evolution as this kind of intelligent workspace.
What stands out?
Well, the big one is search. It's not just text anymore. They're saying it can now index and search across images and videos too, like understanding the content within those files.
That sounds ambitious.
Yeah.
And potentially very useful.
Right. And they're claiming big performance improvements over 50% faster, they said, for things like summarizing info and answering questions. Plus, a redesigned search box, more admin controls for excluding data.
And integrations. I saw mentions of Slack, Zoom, Teams.
Yeah, deeper integrations there, plus Canva and Jira. The idea is to embed Dash right into where people are already working, so you can search and act on stuff from those apps without leaving Dash.
Makes sense, trying to reduce friction.
Exactly. They also expanded the AI writing features, and importantly, they're focusing on security certs like GDPR, ISO 27001, SOC2. That's crucial for enterprise adoption.
You need that trust factor, especially with AI scanning company data. They mentioned a customer example, South-based construction.
Yeah, that was interesting. Apparently, South-based is saving significant time managing documents and getting summaries. It kind of highlights the practical benefit, moving beyond just file storage into, actual productivity gains.
So the potential seems there, but adoption is key. Are they making it easier to get started with Dash?
That's a major focus. They're working in streamlining the whole sales and onboarding process. And crucially, they're building a self-serve option.
So smaller teams could just sign up and go.
That seems to be the plan. Could really open up the market for them. They're also planning to bring some Dash features over to their existing core file sharing and storage FSS customers.
Good way to upsell the existing base.
Yeah.
Okay, let's shift to that core FSS business. What's the strategy there? Just keep it ticking over.
More than that, it seems. They're simplifying, but also strengthening it. Focusing on improving those mission-critical features, smoothing out workflows.
And that's paying off.
Yeah.
Because you mentioned self-serve teams did better than expected.
Right. Even with less investment flowing that way compared to Dash, it suggests those core improvements are working. They also saw a big jump, over 50% year over year, in new desktop activations.
What do they attribute that to?
Better prompts during sign-up and early engagement, apparently. Sometimes it's the small UX things,
Totally.
Mm-hmm.
Anything else on strengthening the core?
Yeah. They've enhanced the admin console billing, dashboards, content management. That's led to record high satisfaction scores from admins, which is important.
Keep the IT folks happy.
Exactly. They also simplified the product lineup. Fewer SKUs, better feature alignment, should make it easier for customers to choose. And they're using strategic discounts to nudge people from monthly to annual plans.
Locks in revenue, better predictability. Makes sense. Now, what about the document workflow side? DocuSign, Sign, FormSwift. Kind of a mixed bag there.
That's a fair assessment, yeah. DocuSign showed solid double-digit growth, still strong demand there, but their own Sign product, facing a tougher competitive landscape.
A lot of players in e-signature now.
For sure. And FormSwift, well, as we said, they're reducing investment. Paying users are down, but operating income and free cash flow actually improved there. So a profitability focus for that one.
Okay, let's circle back to the financials in a bit more detail. Gross margin dipped slightly.
Yeah, just a bit. They said that was mainly due to their ongoing data center refresh, standard infrastructure costs.
But that operating margin, the record high one, how did they pull that off with revenue slightly down?
A couple of big things. The headcount reductions they did last year are really flowing through. Plus, that reduced marketing spend on FormSwift helped a lot.
So cost savings primarily.
Mostly, yeah. Though they also mentioned some delayed spending hitting later, and a release of some tax reserves helped them beat their own guidance for the quarter.
Got it. And cash flow from operations was down. Why was that?
A few specific items hit that line. A lease buyout payments, severance costs from the workforce reduction, and higher interest payments.
Okay. And CapEx.
Pretty low in Q1, mainly due to timing shifts, they said, but they did note an increase in finance leases for data center gear.
Right. Different ways to account for acquiring assets. Okay, looking forward then. What's the guidance? Q2.
For Q2, they're expecting revenue between $616 and $619 million. They flagged a slight currency headwind, and FormSwift continues to be a, quote, significant headwind.
And margin for Q2.
Non-GAAP operating margin expected around 37.5%.
And for the full year 2025.
They actually nudged up the reported revenue guidance slightly, but kept the constant currency outlook the same. FormSwift is still expected to be a pretty big drag on revenue growth for the whole year.
But they raised the outlook for
non-GAAP operating margin and unlevered free cash flow. Both got bumped up for the full year. CapEx and finance lease guidance stayed the same.
end users. Still expecting that decline.
Yep, maintaining the expectation of roughly a 1.5% decline in paying users for the year. Again, largely driven by FormSwift. They also explicitly said to expect more investment headcount and marketing behind Dash in the coming quarters.
Makes sense if that's the big strategic bet. Now, the Q&A often has some interesting nuggets. Anything stand out there?
Yeah, a few things. On the better than expected user numbers, they pointed to good progress in the team's business better retention, seeing potential for Dash attachment there, plus those product improvements helping onboarding.
So core improvements helping retention.
Seems so. On Dash monetization, no major change in their view. They sound excited about the new release, the multimodal search, the integrations people asked for. Customer feedback is apparently positive, pipeline's building, but focus remains on smoothing out onboarding for teams.
What are early Dash adopters liking most?
They mentioned AI search, naturally. Also the stacks feature for organizing content, the multimodal support especially for creative types, and the security and control features for IT managing AI deployments.
What about the consumer side? Seeing any macro impact?
Not really, according to them. They see many consumers using it for mixed personal work stuff, making it mission critical. Plus, the existing sharing networks create stickiness. No major warning signs yet, they said.
And that strong Q1 margin, was that just timing or is some of that sustainable?
Bit of both, it sounds like. Some timing helped, but they also stressed real efficiency gains in the core business and that strategic shift, rotating investment towards Dash. So optimizing R&D in FSS while ramping up R&D, marketing, and headcount for Dash. That promoted.ai acquisition fits in there too.
Right, the acquisition. What was the rationale there?
Primarily about talent, bringing in strong machine learning and AI folks to boost Dash development. They specifically said they're not leveraging promoted.ai's advertising expertise.
Interesting. So pure talent grab for Dash. And the self-serve version of Dash seems key.
Absolutely. They see that as crucial for unlocking the potential within their huge existing self-serve FSS base. They think they can leverage that viral growth they saw with FSS for Dash too. They feel there's a lot of white space in SMB and mid-market for Dash, not much direct competition yet.
Building all those connectors to other apps, so Slack, Zoom, etc., that sounds complex.
They acknowledged that, said it's challenging, needs big R&D investment for reliability, scale, permissions, but they see doing it in-house as a strategic advantage.
Control your own destiny there. Okay, that covers a lot of ground from the call. Let's put on our speculative hats for a moment. This is absolutely not financial advice, remember. But based on all this, got a bold trade idea.
Okay, purely speculative, right? Given Dash's ambition to search across everything a user interacts with, not just Dropbox files, and focus on workplace apps and AI, maybe consider a riskier long position in a company specializing in secure, maybe end-to-end encrypted search tech that can actually index across multiple clouds and local devices privately.
So not Dropbox itself, but a potential enabler or competitor in that broader search space.
Kind of. As data gets more fragmented and AI raises security questions, a specialized tool that securely unifies access across, say, Google Drive, Microsoft 365, Slack, and local files could become really valuable. It's a bet on that complexity and the need for secure, unified access. Maybe it becomes an acquisition target, maybe a key partner. High risk, high potential reward, maybe.
Interesting angle, a bet on the underlying plumbing needed for the future of work search.
Mhm.
Okay, well, that brings us to the end of our deep dive into Dropbox's Q1 2025 earnings.
Yeah, we covered the key numbers, the big strategic push with Dash, how the core business is doing, the document workflow segment, and their outlook.
We hit the financials, the Q&A insights, and even a wild trade idea. Just a reminder, of course, this is all for informational purposes. It's not financial advice.
Please do your own research before making any investment decisions. Always important.
We'd love to hear what you thought. What stood out to you from Dropbox's quarter? Are you buying into the Dash strategy? Let us know. Your feedback helps us keep digging into what matters most.